Financial struggle is rarely a failure of calculation. It's a failure of structure. Without a roadmap, the most accurate math leads to a dead end. Over the next 6 minutes, we are going to build a complete 90-day reset system. By the end, you will have a machine that audits your spending, automates your savings, and grows your wealth in the background. Before we go any further, pause this video. Open up your bank and credit card statements from the last 3 months in new tabs, and pull up a blank spreadsheet. Every successful business tracks exactly what money comes in and what goes out. Transitioning from passively watching your bank balance to proactively directing your dollars is the shift required to run your personal finances like a profitable company. Step 1 is getting completely honest about where your money is going. Take those statements and log every single transaction from the last 90 days into your spreadsheet. Now group those transactions into 3 mandatory buckets: fixed expenses like rent and groceries, discretionary spending for wants like dining out, and debt payments for loans or credit cards. Sort your fixed and discretionary columns from largest to smallest. This forces expensive habits to the top, exposing where capital leaks. Look closely. You'll likely see high-cost items, like a $225 rideshare bill or a $750 car insurance premium. Ask yourself, can you reduce these top expenses by 10 to 30% over the next 90 days? Swap rideshares for public transit, renegotiate your insurance premium, and secure immediate monthly cuts. Extracting even $100 to $400 of this capital is vital. That recovered cash provides the raw fuel needed to power the automation engine we are building in the next phase. Your short-term cash needs a holding vehicle, and a high-yield savings account is the most effective option. These accounts offer interest rates around 4%, providing a steady return on your liquid cash. Next, set up a transfer for 10% of your take-home pay to go directly into that high-yield savings account on the exact day your paycheck clears. If you are carrying credit card balances, call your provider today. Read them this exact script. "Hi, I've been a loyal customer, but I'm looking at other cards with competitive rates. Can you lower my APR to keep my business?" For your automated savings, the immediate priority is hitting the $1,000 mark. Crossing into 4 digits establishes a critical psychological safety net for sudden emergencies. Automating these transfers eliminates the need for monthly discipline. Since the capital leaves your account before you can spend it, you significantly reduce the risk of impulse decisions derailing your momentum. With your baseline protected, it's time to invest. Open a standard brokerage account with a major institution like Vanguard, Fidelity, or Schwab. You don't need to pick individual stocks to build wealth. Instead, set up a recurring purchase of a single S&P 500 ETF. The S&P 500 gives you exposure to hundreds of the top U.S. companies, and historically it has delivered an average annual return of 8 to 10% over the long term. This chart shows the leverage of compound interest. Investing $1,000 a month into that ETF for 30 years, at those historical averages, results in a final balance of $1.49 million. To stay on track for that outcome, you need a firm target. Write down one highly specific, numeric savings goal for the remainder of the year. Data shows that the physical act of writing down a goal increases the probability of achieving it by 42%. Now, pick one active method to grow your income this month. You could negotiate a raise, start a service-based side hustle, or begin learning a high-income skill like video editing or design. There is a mathematical limit to how much you can cut from your expenses. However, income generation and compound market growth have no ceiling, making this phase the primary driver of your net worth. To measure your system's success, you need to track your net worth. The formula is your total assets minus your total liabilities. This calculation shows how that math applies to your life. If you own a $100,000 house and have $25,000 in cash, but owe $30,000 on a car loan, your final calculation is a $95,000 net worth. Open your phone's calendar right now. Set a recurring appointment with yourself every 3 months to run this exact calculation. Scheduled quarterly tracking acts as a diagnostic tool. It allows you to catch financial leaks and lifestyle creep early, before they impact your long-term goals. If you followed these steps, your system is now operational. You have a lean budget, a funded safety net, an automated investment machine, and a scheduled accountability tracker. Wealth compounds through the repetitive, almost invisible execution of this system over decades. It's the result of thousands of automated decisions working in the background. To publicly timestamp your commitment to this 90-day reset, scroll down and type the word Apple in the comments section below. Crossing the first $100,000 milestone changes the mechanics of your wealth. At that point, the market's annual returns often begin to outpace your personal contributions, moving you into a phase where the money does the heavy lifting. Financial independence is the byproduct of maintaining this specific mechanical structure. By applying these calculations consistently, you turn wealth creation from a series of stressful guesses into a